Well, you really do learn something new every single day. I live and breathe politics. Political commentary is my thing. I'm breathing policy and taxes and all the details. And yet, even so, someone like me can still be caught out and go, hang on, I didn't realize that that was true. And one such thing happened when I was listening to former Victorian MP Jeff Shaw talking on Joel Jamal's show. And he made a comment that sent me down a rabbit hole of research and made me discover that actually the Victorian Windfall Gains Tax is so much worse than what I actually already thought it was. And that's saying something because I already thought it was pretty bad. I've invited Jeff Shaw onto the Topher Project. Jeff, thank you so much for joining me.
Thanks, Topher. Thanks for having me. Good to see you.
And thank you for teaching me something new. We were just chatting before we recorded about the fact that your background is actually tax, and I guess that's probably why you're as across the details of this as what you are. Can you explain to us the windfall gains tax? There'd be some people who have perhaps never even heard of it. Can you explain what this tax is and, crucially, how it functions? Because this is the bit that blindsided me.
Well, Topher, it wouldn't surprise me that people don't know about it because there's been over 60 taxes that have been increased or released under this government, and people have got their own lives to deal with. They got things going on, and when a tax doesn't affect you, then you don't worry about it.
I'm sorry to interrupt my interview with Jeff Shaw. We'll get back to him in just a moment. But first, my name's Topher Field. This is the Topher Project, and this is what I do. I bring you stories and interviews that help busy people like you to make sense of the nonsense that surrounds us. And boy, is this windfall gains tax a bunch of nonsense. It actually gets worse as we get further through this interview, and Jeff helps me to understand a few more things that I didn't previously understand. But we'll get back to that in a second. I am 100% viewer supported. So if you appreciate what I'm doing here at the Topher Project, then please buy me a coffee via the button at topherfield.net. And if you like my videos and my interviews, then you're going to love my books. They're all about law, government, civil disobedience in the modern age. That's what this one's all about. And this one is all about the theology of civil disobedience. Good Christians break bad laws. You'll also find my DVD of Battleground Melbourne, my multi-award-winning documentary, and also my merch in a range of different designs in t-shirts and in hoodies. And all of that is available at goodpeopleBreakBadLaws.com. And everything you buy is going to help me to keep the Topher Project going and bringing you interviews like this one. So let's get back to Jeff Shaw.
You know, well, it's not to me. It's people in the country. It's people in the outer suburban area. It's the people in Pakenham, Narre Warren, these type of people down Geelong Way, out the Bellarine Peninsula, up your way that are going to be affected. But it doesn't affect us guys in the city, which are predominantly Labor voters for the most part. So the windfall gains tax came in, and just to explain what it is, if the government comes in and they rezone a area, and you own property in that area, so let's say it could be a farm with a few hectares or over 2 hectares anyway. That's anything over 2 hectares. So you own 100 acres, and they rezone it, and all of a sudden it goes up because of that rezoning. That one decision, it goes up $1 million. Well, the government will come in and they'll say, because of the decision we made, we just increased your wealth by $1 million. You've got to pay us 50% of that. $500,000 due, payable now, payable at the rezoning time. However, you can delay it and pay it off over you can pay it in 30 years' time, but it's going to be at the Victoria bond rate, 10-year bond rate, which is around about 5%. So 30 years, you're going to be paying the 10-year bond rate for 30 years, compounded, or you pay it up front, or when you sell, but you still get the compounded interest. If you don't pay straight away at the rezoning, you get that compounded interest.
Yeah.
And that's how that works. It's incredible that this government is magnificent on inventing new ways to tax us.
Yeah.
Inventing new ways to restrict us.
Can I make a comparison here? Because I had thought, incorrectly, clearly, I had thought that this would operate in much the same way as existing capital gains taxes would. I.e., I mean, if you think about it, if the government makes a decision that increases the value of someone's property, they get tax out of that anyway upon sale in the form of that capital gains tax. But I assumed that you wouldn't get taxed until you sold that property. You would have to make the decision to exit that property. But what this does is it means that someone who's, let's say, a second, third generation farmer, let's say down the Bellarine Peninsula, let's say, they've got 1,000 acres or so, they've got a decent sized property down that way. They can go from being debt free to being millions of dollars in debt with, as you say, interest accruing at about 5% per annum, just at the snap of a bureaucrat's fingers. How come more people aren't aware of this and the details about how just outrageous this actually is?
It is outrageous. I think I did at the start. I mentioned that people are so tied up in their lives, and
Yeah,
taxes are coming all the time that they're just going, "Oh, it doesn't affect me. I don't own a house. I don't own a farm.
yeah.
I'm not a developer or anything like that." So, until it hits their hip pocket,
Mm,
I've spoken to a lot of rental people who own rental properties that when the Dan tax came, I call it the Dan tax, which is the COVID debt tax,
yeah,
but it's really the Dan tax. They wanted to sell their properties because they can't be paying this land tax and this Dan
yeah,
tax and these regulations that you have to comply
yeah,
with. Because it's not just taxes; it's
yeah.
regulations on the rental
And
properties
and,
that people
and
have to comply with.
that's to say nothing of the new fire services levy that's gone out as well.
Yeah.
It's I mean, there's just so much. It is so outrageous. So just help me to understand, because not everyone is, you've got a tax background. I look at this stuff all the time. Not everyone would fully have grasped the implications of it being payable immediately but deferrable for 30 years with that interest accruing. I've talked before about the fact that if you buy a house and you get a 5% loan paid off over 30 years, whatever your loan amount is, you will have essentially paid twice. Once in the loan principal and a second time in interest. It's not quite exactly that much, but the interest will almost equate to the value of the property over that 30 years. And that's assuming that you're paying it off progressively like a mortgage over those 30 years. So let's take that scenario. That would mean that a $1 million uplift in property value, if it was paid off over 30 years like a mortgage, would have resulted in $1 million in tax and interest for the owner of that property. It essentially becomes a 100% tax.
I'd say it's more than that because it's compounded, Topher. It's
Right.
compounded. If you took it to 30 years, it's compounded. It's not just 5% a year, 5 times 30, 150. If you just did it basic,
Yeah.
5% over 30 years is 150. So you're paying 1.5 million
Yeah.
on that $1 million uplift.
Yeah.
But it's compounded. Now, I haven't done the figure. It's easy to go into an interest compounding calculator and find out, but it's going to be over $2 million if you did that over the 30 years. Now,
Yeah.
you would hope that that property would have increased in value, but what if it didn't?
And how outrageous that essentially now the government is going to tax the entirety of this supposed uplift in value that they've supposedly given you, and then also be taxing the future inflation essentially. And I've talked on this show before about the fact that actually capital gains taxes are largely just taxes on inflation. I want to make one more point and get your thoughts on this, particularly as a former member of parliament. Isn't it true to say that the reason why these properties weren't already worth that much is because of government restrictions in the first place? The government is trying to argue and say, we're adding value to your property, but isn't it actually true that the government are simply no longer restricting the value of that property in the way that they had been?
That's right. They've put restrictions on it, so it limits the zoning limits what it's worth.
Yeah.
So yeah, you're correct. Their government policy limited it, and now their government policy has put an uplift factor on it. Whenever the government gets involved, I know I'm speaking to someone who agrees with this. Whenever a government gets involved, there's going to be strife.
Yeah.
It's not going to be good.
Well, it's honestly, it's starting to feel like an organized crime kind of protection racket. Like, we're going to be standover men and stop you from fully exploiting the value of your property. And then one day we'll change our minds and we'll let you actually exploit the full value of that property. But you'd better pay your dues, which, by the way, your dues are going to be even more than the increase in value. At what point do we just call this organized crime?
Well, I call tax legalized thievery anyway. It's legal.
Yeah.
Tax is legalized thievery. I've said that even when I was an accountant in my tax days, and more so I see it now during this government. You mentioned capital. I want to make it clear. Capital gains tax is a federal tax.
Okay.
So the federal guys get, when you sell a property that isn't your primary place of residence, if you've made a gain on it, if you bought it after 1985, which Hawke and Keating bought in, there's a capital gain. That's a federal tax. This is a state tax that wants their gain now too. It's very similar to this unrealized gains that they were going to do in superannuation at a federal level. Exactly. That's at a federal level. The state have taken and said, this is what we're going to do.
Okay, so you've got me thinking even deeper now, because with capital gains tax, the gain is calculated based on the depreciated acquiring value. So you buy an investment property, you depreciate, let's say, the kitchen and some of the other things inside that value, and then once you sell it for an increased amount, the gain that the federal government taxes you on is the difference between the depreciated purchase price, I'm simplifying, but between that price and the sale price, essentially. Do the
and
government?
then half of that, and then
Sorry.
half of that is taxed. So
Yes.
half of that,
That's right.
half of that you've got to declare, and then that half of that's taxed.
Okay. So if a farm owner has their land revalued, and let's say they immediately choose to sell, they say, you know what? Okay, I'm out of here. Is the tax that they have, the windfall gains tax that they have to pay to the Victorian state government, deductible against the capital gains tax they have to pay federally? Because if it isn't, then if they sell, even if they sell immediately and they don't incur any interest, are they not simply going to pay half of it to the Victorian government in windfall gains and the other half to the federal government in capital gains?
Yeah, that's correct. But that's correct. You're thinking if that was the case, but no, it comes off the cost base of the property for capital gains tax federally.
Okay, so that means that they're only going to lose 75%. So they lose half of the gain in the windfall tax, and then they lose half of the remainder for a total of 75% in capital gains tax.
In capital gains tax, it'll be a bit less than that at the federal level. It'll be probably half that. So they will lose at least around about the 65% area
insane.
In federal and state. Yeah, it is.
And that's if they don't accrue any interest on the windfall gains. And that's, of course, again, ignoring the fact that it was the government that was actually withholding the value of that property in the first place. Jeff, you've been a member of parliament. You know that there are some good people in there. There's a lot of self-interested people in there as well. What do we do about this? This is madness. We quite literally cannot go on like this.
Yeah, I agree. I mean, when I left parliament in 2014, the state had a debt of $22 billion. And one of the things I was going to do if I went back in was to push for no payroll tax, which is about $7 billion a year. But payroll tax, what is payroll tax? I mean, you're taxing it's madness. That policy could have come true now because we're coming up to $200 billion in debt, nearly 8 times more debt than we were 10 years ago, Tony.
Yeah.
8 times more debt. Have we got 8 times better road, 8 times better bridges,
no,
8 times better public service? No.
8 times better policing and courts and criminal justice system? No, I don't think so.
No, we don't. So that's an enormous amount, Topher. That's 8 times. So 22 billion to nearly 200 billion. The interest on that, if it was at the bond rate of 5%, we're talking 10 billion a year. We could have wiped payroll tax, wiped a whole government department of payroll tax out, and stop putting pressure on small business and auditing them and putting all these pressures and regulations on them. And that could have been just wiped. But we can't do that now. It doesn't seem. Yeah. This government has a real appetite for spending. It has no problem with I've said it before, you may have even heard me say it before, it's like, and excuse the wives here, it's like a wife with a credit card. And you just go out and it doesn't matter, someone will pay it. Oh yeah, it'll be my husband. Or for those who the husband's a spender, let's do it in reverse. Yeah. But that's what Jacinta Allen's like. She's and Dan Andrews were like. They were like the spouse with a credit card, go out and spend. Who's going to pay it? It's us guys that pay it here in Victoria. And 27 out of those 60 odd taxes are on property. So it's on property owners. And of course, you know that a lot of those expenses get transferred across to the consumer or the renter.
Yep. Absolutely, they do. Of course they do. Nothing's for free. Everything's a trade-off. Yeah, there's no such thing as taxing a property owner. You're taxing individuals, either the people that live in, generally you're taxing the people that live in that property, whether they're renting or whether they are owner-occupiers. That's where the tax will fall. The same is true for business. There's no such thing as a tax on a business. You mentioned the payroll tax. When you tax a business, you're either taxing the owners and shareholders of that business who get reduced dividends, or you're taxing the customers of that business who get get increased prices, or perhaps in some circumstances, you might be taxing the employees who will miss out on any pay rises or bonuses that they might have received. It always comes down to people. Every single one of these taxes, no matter how they get dressed up, is a tax on the people of Victoria. Well, Jeff, it's not often that I learn something new, but today is one of those days, and that's courtesy of you. Thank you so much for coming on to the Topher Project. Sorry, did you have one last comment there?
No other comment, Topher, but thanks for having me on, and really it's like I say, people just get caught up in their day-to-day lives and they don't know about these things going on because until it affects them, or until someone like you highlights what's going on, because in mainstream or the Labor Party will put a different spin on it.
Yeah, of course.
Than what it actually is, which is a massive tax grab.
Well, that's why I do what I do, and that's why I'm so grateful to you for doing what you do and helping me to learn things that I didn't previously know. Jeff Shaw, friend of the show, friend of the Topher Project, I thank you for coming on and educating me today.
Thank you, Topher. Thanks. Good to see you.
Thank you for watching my interview with Jeff Shaw. I really appreciate you watching all the way to the end because the algorithm loves you, and so do I. I am 100% viewer supported here at the Topher Project, so if you appreciate what I'm doing, then please buy me a coffee via the button at topherfield.net, and also make sure that you've joined my email list because as December the 10th approaches and that under 16s social media ban, I don't think it's going to be a really big deal, but it is going to affect some people, and the safest thing to do is going to be for you to be on my email list. So make sure you do that while you're at topherfield.net. And also, if you appreciate my videos and the stories that I bring you, then you're going to love my books. They're all about government, power, and civil disobedience, along with my DVD, Battleground Melbourne, and of course my t-shirts and my hoodies in a range of different designs. You'll find all of that at goodpeoplebreakbadlaws.com, and everything you buy is going to help me to keep doing what I do here at the Topher Project. Thank you for watching all the way to the end. Please like, comment, subscribe, and as always, think free.